In the currency quadrant today, taking a look at new lows in the June Japanese yen futures contract. The yen hit its lowest level since 1990 today, 34 years ago, and in the process has had its worst session on a percentage basis since February 2nd. The low today into the New York close, 63.86, that was down 1.4%. We were still basically on those lows as the New York session started to wind down about 1.33%. The high today, 65.03, that was up 0.4%. The yen is now down 7 consecutive weeks, with this being one of the worst of that 7-week streak, being down over 2%. And as we approach the end of April with only 2 trading sessions left next week, this is the 3rd consecutive month of lower prices for the yen, and this month is set up to be the worst of that 3-month streak. We had a Bank of Japan decision yesterday, and they kept interest rates unchanged and expressed that inflation was on track to hit 2%. The Bank of Japan kept its short-term rate target steady at basically 0, and they're sticking with the bond buying guidance that they set in March. The board projects inflation to stay near 2% in the coming years, and Bank of Japan Governor Ueda said the Bank of Japan will hike rates if data confirms its price view, so giving a little rate hike warning there. He also said that the weak yen, if it persists, could affect inflation policy. It's already persisted for 3 months, so we'll have to keep an eye on that. The dollar recovers. The dollar fell early in the week, but recovered with today's strength. In the aggregate, the dollar was still down just short of 0.1% on the week, but it did recover 0.5% of lower prices that happened during this week. The dollar is not just down against the yen today, but was down against the euro as well as as opposed to slightly higher against the British pound and the Canadian dollar, but it was definitely down up against the yen by about 1.1 1/3%, we'll call it.